Thank you very much, Katerina. Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. Today is Tuesday, March 28th, and I cannot believe that we're just about to end the third month of this year. Here, my local time is still 6 hours behind GMT. Until this Sunday, Mexico will switch to the DST. It's 1 a.m., 12 minutes past the hour here. It's 7 a.m., 12 minutes past the hour GMT time. This is me, my picture, my social media, Google+, YouTube channel. That, by the way, I just updated that on Sunday. For personal reasons, I couldn't show up yesterday. It wasn't my plans to broadcast, but I couldn't, sorry. So, but well, today I am here. We have tons of things to talk about, and let's begin. Let me just close some stuff, because if not, you know that this thing starts overheating. Okay, here it is. Well, what do we have to talk about? Well, we're going to review my overall outlook on dollar yen. I'm still fundamentally bullish, as you know, and as I've been commenting in other webinars. My fundamental outlook is still to the upside. I was commenting the last time I broadcasted that the 110 and serious breakout to the downside was the only thing that could make me change my mind. But it hasn't happened, although we opened the week with a very big gap to the downside. But yeah, I am still thinking that this is only a technical correction. I believe that the mass media is just hyping this thing, and it's maybe causing that temporarily we are seeing some bearish dollar trend to the downside. We're going to review that in more depth in some minutes, because the mass media is trying to convince us that what they are now calling Trump's rally is over. I think it's far from over, but not because of him. Initially, the name Trump's rally, I believe it's wrong, because this is not due to him. This is actually due to the latest maybe 2 or 3 years of administration by Barack Obama, because this guy hasn't been able to do something that could be endorsed to him. So all the good things that are happening now are not because of him. So this rally is not due to him. So that Trump's rally concept is wrong. Well, you know, it's much easier to market here a Trump's rally is over, whatever, than to talk about the former president, right? So we're going to review that. We commented some of that last week. I barely talk about the stock markets here in the webinar, but we're going to review a little bit what we said last week about the stock markets and what I was expecting, and that what could cause in the currency markets. And well, let's begin. Well, first of all, we're going to take the dollar yen chart. This is the daily chart, okay? So let me shrink this. So this is the daily chart. This is the I've been following, overall commenting very dedicatedly here in the channel. Well, here in the webinar, that after this drop to the 112 here, we have this massive rally. At this moment, a line was crossing here, a triangle that was broken to the downside, then retested that line, then go above to the 115.50. Then we had the FOMC post reaction, and then we just continued having this thing selling off. Let me just pull something. We've been commenting that maybe it's even irrelevant to continue commenting this, but the things that we can follow up, all the things that I say here, just for the sake of knowing that if I am completely nonsense or not. So this is what we've been discussing lately, that this time cliff that I drew on March 17th actually accomplished its function. The market continued selling off up to the close to the 110, and now we are above the 110 level. So, well, this sell-off is from here, okay? Well, this is exactly here is here. So we have the 112 breaking to the downside. Now we're consolidating here. I was commenting on Friday that the mass media was saying that the risks for this was were to the downside, and I didn't agree with that, and I explained why. When you have these kind of things, by the way, this is a rectangle. It was another figure. I don't remember what figure it was, but it was very closely related to this. I believe it was a double bottom. Sorry, it was a double bottom. But now it just broken to the downside, and even though we just broke to the downside, we are hovering here in a very decent consolidation zone above the psychological level. Let's remember that. Well, let's continue with this technical thing. The first objective take profit target of this thing was, of course, this. And maybe the second one could be, what? More or less 109, maybe. But of course, we have the psychological 110. And as I was commenting the latest time we reviewed the daily chart, now we're retesting this support zone, all this. So basically my approach on dollar yen in the fundamental side, this should be a long-term buying zone. So here you could expect the market, maybe the volatility to shrink a little bit and to find long-term buyers here. While in Bloomberg they were saying that the risks were to the downside, I was saying that actually this zone was to buy. As long as it holds above the 110 psychologically, fundamentally we're still biased to the upside. And technically, even though we're having pure technicals to the downside, the psychological level is clue. If this is broken convincingly, we could then expect this to maybe resume its move to the 105 at least, to retest this zone. Okay. 106, 105, 107, something like that. But of course, to confirm a breakout, we should have a breakout maybe to the 109, 110, and then a retest of the 110, and then to see the price not being able to convincingly break it, and then that could mean a shorting opportunity to the downside. But of course, that could take months. So when you have these kind of things, you just trust on the fundamentals. The problem is that here, circumstantially, in my opinion, all the dollar pairs, dollar was moving to the downside, but not due to the change of fundamentals, but just because of again circumstantial stuff based on in the stock market. We're going to review that again. So yeah, my bias here is still to the upside. As you can see, we're hovering here. I mean, if you were aiming to reach the next maybe technical price of breaking a rectangle in the daily chart, it should be like 108, 108.50, but you have to deal first with the 110. So if you didn't short here or here, here is not a good price to short. It's maybe not now. In my opinion, this is buying zone, period. But if you want to maybe tune in something, maybe the logical thing is to try to go with the fundamentals. Because as I was explaining some other time, when you go with the fundamentals, sooner or later, the market will do its thing. Of course, if you bought here and you kept the trade open and you are now 400 pip in the hole, yeah, maybe after 12 months the price will be here. Of course, knowing when to buy, it's important. That is why you don't buy at resistances. You buy at supports. If you bought here, maybe something here, you still have this timing of waiting to see if the 110 is tested, how it is tested, and then to decide on your long trades. So yes, I don't see any reason for dollar yen to go to the downside. Okay, let's review the 1 hour chart. This was the gap to the downside. We closed the wick here. This was a gap to the downside at the opening. We just continued making the lower lows. Then we have here, now we're retesting this resistance at this moment. I do believe that, I don't know if we're going to have a retracement, but I do believe that this should be broken to the upside, and at least the 111, and then maybe have a retracement, and maybe to continue with a consolidation zone. It is expected that maybe one of the most volatile things to trade for the next month is going to be dollar yen. So that could explain you why shorting this. I mean, you can short or long this. That depends on a lot of aspects. But if for some reason you are trying to find, it makes sense. If it is expected this to have above average volatility, and we are just a little bit deviated from the fundamental move, this retracement opened a window for buyers to enter the market. So the theoretical expected movement should be to the upside. Of course, everything can change. But I believe that this expectation of having higher than average volatility in dollar yen is because of this anomaly of price action according to the fundamental expected move. So this is what I believe, this is what I think. I am considering reopening bullish trades because if you remember, I told you that more or less here, if I'm not wrong, I closed long trades that I opened here, and I just forgot about longing things. I am now reconsidering an opening in live accounts, so that is why I'm sharing this with you. Of course, you can short this, you can long it. It's your money, it's your trades, your responsibility. Why I consider opening longs now? Well, because we're close to a psychological level. What I really don't know is to put a limit order to the 110, to the upside, to wait for a pullback here, and then just wait to see what the market does, or just maybe to open it in the next hour. I really don't know. Maybe I could open now half of the position, just wait to the 110 to open, then open half of the other position. I need to decide on that in the next hours. So, well, again, the fundamental bias is simple. A strong economy that is not due to Donald Trump. So, I mean, this is the post-wave effect of doing things properly. Economically, even for people calling, or at least Donald Trump calling Obama like the worst ever president, the most stupid one, because according to him, everything that Obama did was a mistake. Well, you cannot discuss evidence, results, and results are telling otherwise. The things and the consequences of holding and managing things properly the latest 8 years is paying off, and that's not thanks to Donald Trump. So this is not going to end because of Donald Trump. Actually, what we're seeing now in Congress, if you were not aware, I believe it was Friday or yesterday, we had the health reform bill that this guy was very sure to be passed by the Republicans. He faced the first hard reality check that in this case, he's not the boss, not the boss, okay? He is just one part of the system, part of an equilibrated system. So things are not going to be done just because he thinks they are right. So this is the first reality check. And it depends how he reacts after this, what will define his preference. He has lost almost 90 days of his presidency fighting stupid things. Immigration bills that are not going to be passed, that are blocked by I forgot the name, the other power that is not the executive and the Congress. And the most likely thing is that will be time wasted. This health bill, apparently he's not going to retake that. He's still trying to fight for money for the wall that most likely it will be denied. So, as I said, the rallies in the stock markets overall were because they just found a way to feel comfortable under Donald Trump's administration, overall realizing that what we can expect in the next 4 years is that things are going, at least in the business side, are going to be the same or better. The markets really don't care about anything else. So that is why this might continue, this stock market bullish move, etc., will continue even if the Congress continues blocking everything, because as long as the Congress, and the Congress won't do that, changes by itself something that has helped the American economy, the markets will continue being happy investing in the United States. So the United States is not a presidential country, meaning it's not a country that depends on the president. It's a much more complex entity. Fortunately, that is why this is happening. All this while the ideas that this guy had since the very beginning are starting to face. Do you remember when this guy said his presidential speech that I said this guy has to be even more aggressive because he knows he's isolated already, and the first resistances are going to come from the very Congress and the very Republican Party, and that's what just happened. Or well, what is his start? It's beginning. So the markets really were afraid of his trade approach that he has moderated a lot. So, yeah, even if he continues spoiling all the time as president, trying to fight for this Muslim country ban, etc., well, the markets know that in the business side, things are going to stay just pretty much the same, that maybe we won't even have a review of the NAFTA agreement. I was considering, since this guy got to the presidency, that by this month, maybe we should, even Mexico would have decided just to quit the NAFTA agreement by its side. But well, the thing is that the dates are delaying because this guy realized that he needs to gather energy to continue to achieve at least something that he promised, because he's now seeing that his power is diluting. He's not as powerful as he thought, because the only thing that this junior knew all the time is that he was a boss, that he was a billionaire, and he was pretty much all. I can bet you, most part of the times, this guy made it his own way. Got what he wanted when he wanted. But now it's different, because he's not the boss. So, the most likely thing is that the American economy will continue delivering good results, because the only things that he could change, that could switch that, apparently he's not even insisting that convincingly on that, at least not directly. He's just leaving, for example, these NAFTA talks to the specialists. He just decided maybe just to stop talking about that. So if you allow people that really knows how trade is done to fix this thing, the most likely thing is that we will just have an update on the NAFTA agreement. And an update is always good, because this agreement has more than 20 years and hasn't been updated. And of course, technology and a lot of things have changed these latest 20 years. So it's a good time just to update it. So that's even more, that's even better for the United States, because it's okay, let's just update it. Some things are just irrelevant, and some other things are needed to be included. So yeah, the stock markets are telling us the real beat on that. The latest sell-off, or let's call it sell-off in the stock market, is what really caused this. Of course, it was amplified in dollar-yen. But yeah, bottom line, American economy, at least for the next 2 years, I don't believe that we even have to bother, let's put it 1 year, to bother to worry about that maybe the American economy could be overheating or maybe having problems, etc. Because we are in the shock wave of still Obama's administration, and that will last more or less 6, 9, 10 months. So yeah, for this year, the markets are just forgetting about. What I think is that the markets put all the spotlights on Donald Trump. When they realized that he was isolated already since the very beginning, they just started putting, again, attention on the legacy of Obama in the economic side. And they started putting money inside in the United States. Besides, they knew that, well, it was supposed to be logical that this president should, maybe the only thing that you can expect from a billionaire that's good at business, right? Or at least you want to expect that from a billionaire. So I think that they said, okay, we're not going to be worse, so let's put money there. So yeah, this is not going to change, at least in the next year, the fundamentals of the United States economy. Of course, the fundamentals of the Japanese economy are not going to change in the next year because they have been there more than a decade. So yeah, this is pointing to the upside period. So for the ones that are really patient, for example, if you're really maybe targeting a trade that maybe you could leave open 6 months, maybe considering a long trade here is a good idea. Maybe if you want to the 110, of course, this doesn't mean that this couldn't be wrong. Of course, this could be wrong. So that is why it's your responsibility and decision to take a trade to the upside or downside. That's up to you. In my opinion, I believe that if I am right, I end up being right. Buying here could simply allow you just to let the trade open, I don't know, start closing, scaling out while it goes to this zone, and maybe just let one very small part of that trade to run. It could actually get to the 150.50 or even to the 119 or 120. So yeah, fundamentally, I'm still holding a bullish bias here. So what I dislike is that in the hourly chart, we are making lower lows and we're not seeing actually volumes to the upside. We can actually draw volumes to the downside here. We're not really seeing a lot of inflows buying here, like what we have here, for example. We could draw a line to the upside while it was moving downside. We're not seeing that. But even though we're not having that here, we already had it here. So that is why I really don't know what to do now. Just maybe open here, wait for a pullback to the 110.40, or just wait for the 110. I need to review that in the next hours. So what we're going to review is what we just said. I was commenting that the latest post on dollar-yen price range boxes opened the time cliff just at the enter of spring in the northern hemisphere. Because and as explained that this is called time patterns, seasonality, some people call them. But the bottom line is that maybe in the subconscious mind, we humans respond to planetary events like this unconsciously. And we prepare things to have huge impacts in our lives, even if we don't realize it, to synchronize with these planetary events. That is more or less the concept of astrology. That it is, they consider that planets, stars, etc. have influence on humans. I believe that the far they are, the less influence they have on you. But of course, the sun, moon, seasons have, of course, a huge effect on the planet. That is something that is not astrology, it's science. So that time cliff came at a time where this is the Nasdaq, the tech index. This should be the equivalent of the Nasdaq 100. And just some days before the the spring hitting the northern hemisphere, in the weekly chart we had seen that this trend line coming from very early, you can see is before the 2012. We've been holding this bullish view. By the way, we just I just commented on more or less here. We just hit the 2000s high. So when you have that, and you have then in the weekly having several weeks retesting a resistance, and plus you have that spring thing, well, maybe just a take profit signal. Not a shorting signal, but a take profit signal. So that is why this is explaining overall the dollar-yen thing. For some reason, the market synchronized to, okay, if the tech index moves down, dollar-yen moves down. Just temporarily, apparently, that is like how the things are happening. I really don't know. I was saying that I was expecting that at this point maybe we could have some take profit thing, but because this has coincidence with Donald Trump being a health bill being rejected, and suddenly that, of course, that helped for the profit taking. Of course, when you have that, maybe you said, okay, if I was going to take some part of the profits, maybe I just take a little bit more. So that has the effect of having what the mass media called sell-off of the stocks. So when you look at this kind of charts, in the weekly chart, where do you see the sell-off? There is no sell-off at all. It was only a circumstantial take profit target that made a synchronization with timing with the spring, with timing with Donald Trump health bill being rejected, and showing to the world that he's not going to maybe have that support by the Republicans, all of them, to all the nonsense. And then the way the mass media started marketing that was that this Donald Trump rally is over. So that didn't help either, and that conducted to more take profit conduct. But the thing is that this rally, this is a bullish rally. We have Obama ruling from 2009. This is 2012. If this rally is due to somebody, it's to his administration. So when you see Donald Trump rally is over, it's very clear to see how they manipulate information just to sell. So be aware of having your own criteria when you turn on mass media overall for financial decisions, because they really don't care about delivering quality information. They're just interested in finding a good way to market here the news. This is the weekly chart. This is in the daily chart. Yeah, this is the sell-off, you know. We have all this movement in the daily chart, and this is what they call the sell-off. This is the stock market is going to enter in the bear market because the Trump rally is over. What Trump rally? I mean, yes, we had an exacerbation. Here is more or less when he took presidency. Yes, we had this rally. But what, tell me about this all rally and all this? This is part of the natural movement post-Obama administration. This has nothing to do. Maybe, yeah, this is the markets were eager to buy because they held buying things after the uncertainty if Donald Trump was going to be anti-trade, etc. When they realized that maybe things are going to be the same, they just started getting in the market. So this is what the mass media is not telling you. The market started getting, at least my reading is this, the mass media started buying the stock markets not because they trusted Trump, it's because they found a way to feel comfortable under Donald Trump's administration because they realized that things are going to be more or less the same. So this has nothing to do with what he was going to do. It's what it was not going to be able to do. So that it's a huge difference. This rally is due to that. What he was not going to be able to do. So yeah, this sell-off is circumstantial. I mean, when you see this and you watch the weekly chart that is this, and you see this, it's completely normal. Now look the volumes. Do this volume tell you that this is a sell-off? That is not true. I mean, everything can happen in the markets. Of course, this could sell off and it could go to the 4,000 units, whatever. Yes, it could happen. But at least so far, my reading is that, yeah, worldwide, with or without Trump, overall, with a Trump that is not going to be able to commit economic suicide for the United States, the numbers that the United States is delivering after Obama's administration, and according to the worldwide economy status, the best place that you can put your money is in the United States. So it's a no-brainer. This is, for me, getting in the stock markets in the United States is a no-brainer, like buying dollar yen. It's like a no-brainer. But of course, we could have a correction. When you have these kind of things in the weekly chart, of course, the correction could lead to the 5,000, to the 5,200 units here, or even here to the 5,000. Yes, it could happen, but that's not a sell-off. That doesn't mean that suddenly the markets got disappointed by Donald Trump and then everything is going to hell. No, that is not the way it goes. So again, while the fundamentals stay the same, like the American fundamentals, like the Japanese fundamentals, dollar yen should go up sooner or later. So we're crossing a little bit of the price action in the tech indices with dollar yen. But this is the same. This is the Nasdaq 100 daily chart. And I just wanted to show you. This is the Dow 30, and let's put it the best 30 companies, if you want to call them that way, best or best more capitalized, etc. in the United States. This is the weekly chart. Okay, thanks a lot, Kerry. I believe that you saw all the intentions of myself to overextend a little bit. Thanks for the heads up. So this is the Dow 30. Okay. This is the weekly chart. Of course, this is not as bullish as the tech movements, okay? But it's still bullish. This is weekly chart. We are just after this. Let's start. Let's say hesitation zone at the psychological 21,000 units. We just had this pattern. So yeah, this makes synchronization with that weekly. Now all the stock markets in the United States are being led by the tech index, by the Nasdaq. So that is why it made sense. In the weekly chart, we're hitting multi-year resistance, and it took a little breath there. So yeah, in the Dow, it was a good excuse just to take profit. Here is way more visible. That is why they call a sell-off. But what kind of sell-off is this? I mean, you cannot measure a sell-off of this kind under these volumes. Come on. But again, selling a lie is way more profitable than selling a truth. So the mass media easily changes truth in a way that at the end it seems to be a lie, what they are selling. But well, as you can see here in the weekly chart, we're very close to this moving average. So maybe if we are not close to that moving average in the Nasdaq, at least in the Dow 30, we're really close to that. So this could work as a cross-market support that will work for the Nasdaq, even if we don't hit the moving average in the Nasdaq. Of course, we could have that Nasdaq moving even lower, and this could even go lower to maybe to the 2,000 units. So we see that we have a lot of psychological supports both in Nasdaq and here. So in any case, the stock market sell-off, as they want to call it, continues. We have fundamentals sustaining this to go to the upside. It's the same logic after dollar yen, my fundamental view of dollar yen. The fundamentals are still aligning, and we have psychological levels before, they're below. So yeah, maybe it's only time that this will continue, resume its natural move to the upside. Okay, so this is how this looks, the Dow 30 in the weekly chart, and this is how it looks in the daily chart. We have had some movements to the downside, and this heavy movement some days ago. Then we opened a gap to the downside yesterday. But as you can see, there is no major thing. Here the volumes are a little bit higher. But as you can see, it has nothing to do with this. So unless we reach a volume more or less here, either a candle to the downside or to the upside, everything that is happening now, since it lacks of technical meaning, we should contextualize it inside a fundamental meaning. That is, the best place to put your money is in the United States. So yeah, this should continue its movement to the upside sooner or later. That can change, but at least so far, in my opinion, we have not a single signal for that. Maybe further correction, maybe. But I really don't think that is something that we will have to worry about. So let me see if I find something interesting before closing the webinar. Because, well, since today I couldn't prepare the, well, not prepare, since we are just after this sell-off in dollar yen, I really want to see some consolidation here to maybe start drawing the price range boxes. As I explained in a webinar, I don't remember which one. The price boxes, when you are drawing them, it's when they get to a certain kind of stability. You don't have to wait months. But we just have, we just have a gap to the downside in dollar yen. So it's not the best time to draw maybe after today's price action, I could then draw the price range boxes to share that in the traders blog, and to then start elaborating maybe potential scenarios for dollar yen. What it really concerns me is in the latest traders blog post, that time cliff that opened a way to the downside. I really interested in the next price boxes to try to find the timing of the potential cliff to the downside, if there is any. Because if there is any close to, let's say, that could happen in the next days, I then would wait to buy and maybe try to look for a pull to pull back to the 110 and then buy there. But that's only if that time cliff synchronizes with what we can expect in the next days. So that is why I was saying I don't know what to do now. I need to do the analysis. I am not really sure the market is ready. I don't feel it ready to start following that price range boxes. It's kind of finding, it's like that analogy I gave you. When you move an animal from one habitat to another, the first days the animal is very stressed because he needs to find food, water, and shelter. Once this animal finds those three elements, then we can start seeing patterns, behavioral patterns. So I believe that maybe today, maybe tomorrow, we could have that the dollar yen, and then I can draw the price boxes and then try to draw a trading plan. Okay, so I need to do that analysis, because it makes no sense that I just throw some irrelevant price boxes now that maybe tomorrow are going to be completely different. That would make no sense. That would be even irresponsible, because when I mean, I don't feel pushed like the mass media that I need to come up with something no matter what. No matter if I have to bend the reality a little or a lot. No, I'm not paid for coming up with the price boxes of that week on Monday. No, if I don't find it on Monday, I will share the boxes when I find them, even if that takes a month. So yeah, let's just try to see what dollar yen does. Let me see if it has done in the latest minutes something interesting. Well, just this is dollar yen. This is hourly chart. I just showed you this some minutes ago, that it was hitting here the resistance. In the latest minutes, what we have is that it responded to this resistance, and then it recovered. So yeah, maybe if this trend line is broken, here it's close to the 111. So I expect that even if this breaks, at this level should have a retracement. If we break this, and if for some reason I find some interesting price boxes that could lead me to open a trade in a pullback here, maybe I will program one trade, but I still see it very early. This is going to be, I mean, if the price gets here to the 111, it's here. So it's the closing gap pattern. As you can see, the gaps are not always closed immediately. This is another example. Maybe if it gets here in the 111, it will just take profit. So maybe after, if the market does this and comes back maybe after this pullback, is when the price boxes will show up. In any case, that this doesn't move to the 111 and continues moving down, unless we really don't have a huge volatility to the downside, maybe a steady volatility, maybe tomorrow or the day after tomorrow we could have reliable price range boxes. So well, this is the latest update on dollar yen. Let me see if I find something interesting. Apparently we have a, I'm not going to comment that because it's not that I don't know why I can cannot switch to the dollar. Well, for the ones that are following exotics, we had a massive move to the upside in the dollar versus South African rand, because apparently the president there wants to fire the finance minister, so that is not good news at all. That shouldn't be happening. It is said from quite some years, overall after the World Cup, the Football World Cup in South Africa, years ago, I really don't remember when, the economy of South Africa really didn't make it to overcome the 2008 crisis. It's been said for a few years that the South African economy was doomed to have a devaluation. But a devaluation not because of this devaluation, everything devaluating against the dollar, no. Due to domestic characteristics. So I really don't know, this could be the first signals of that, and maybe the president, of course, wants to protect his image, and maybe the finance minister is not simply wanting to do something that it's not, I don't know. But of course, the democracy in South Africa has nothing to do with an evolved democracy, so I wouldn't be surprised that this guy is going to be fired because he doesn't want to exactly do what the president wants, even if the president doesn't know what he wants. The reaction in the South African run was super bearish, so I just wanted to pull the chart. I cannot open it, I don't know why. Because maybe for the next month that could lead to good opportunities. In any case, this is the beginning of that expected evaluation from quite some years, but this is the same thing that is happening with China. I am expecting the Chinese economy that bubble to burst, and I've been waiting that for quite a long time. And gradually the scenario is changing to China bubbles are going to be exploding in a controlled way during the next years. But I don't think that the South African run economy could do that. Of course, China can do that because of the massive reserves they have. Of course, that is not the same thing with South Africa. So yeah, it could lead to good trading opportunities. But well, maybe tomorrow we can review them. Let me see what else. I believe that's pretty much for today. Yes, actually my platform just froze. Okay, so it's time to call it a webinar. I would like to thank everybody. Katerina for hosting as always. Rocas, my friend, for being around. Sharp Sense, very quiet, but he's here, so I want to thank you for being around, all the guests. And well, expect me tomorrow. I want to, due to some personal reasons, it could happen that I don't even have time to tell Katerina that I won't be showing up for broadcasting. There are major personal stuff that I cannot foresee when they're going to happen. So if at some time I just don't show up and I don't have the chance to let Katerina or to let you all know that maybe I won't be broadcasting in advance, I am sorry. I will try to do my best to, in any case I cannot broadcast, to let her know, or to do my best to just broadcast, because as I explained some other webinars, I like a lot to deliver the webinars. It's therapeutic to me. It helps me a lot to focus, to just forget about some stuff, and to start the day with good vibes. Karina says, Roca says, thanks. No problem, my friend. Thanks to you. Karina, please find some time because then I will stay home longer. Thank you. Okay. Yeah, if it's foreseeable, I can let you know. But if it's something that's really like, I don't have even time to react, well, it could be difficult. But yes, I will do my best. So you can rest a little bit in your bed, drinking hot cocoa or coffee or tea. Okay, Katarina? So, remember that I expect you tomorrow at the same time, at the same place. This is me, myself, Alberto Alvarado. These are my social media. Remember to trade safe, be safe, and bye-bye.